All right, gang, welcome to our pre-market session. We're going to take a look at what we have going on here today. All right, hey there, JD. Good morning. Just wanted to say thank you so much for this pre-market review. You are the best. JD, I'll tell you what, it's kind of a funny story, straight up. So I don't know if it's just sort of the markets, the quarantine or whatever, just the Mars retrograde, but I started slacking on some of my morning routine. I was doing, my other stuff, but I was sort of slacking on what I'm supposed to do here. I was getting it done, but in a very minimal, sort of uninspired way. And I thought, you know what better than being, having someone accountable to, having something to have to go live and not sound like a fool. Really, I mean, I thought, you know what, let me start getting my notes together. In fact, I'm going to show you guys my notes right now. Let me start getting my notes together again. And there we go. And start, kind of getting my butt in gear. And I thought, what better way than to go live? And I've always wanted to. I used to have in the late 90s, early 2000s, radio show that I did twice a week, sometimes once a week, mostly twice a week. Sometimes I'd guest for another investing stock person in the area, and then I had my own, and I loved the preparation for that. Nothing like the threat of public humiliation. Anyway, so yeah, that's why I went live with it. So I appreciate it. I'm enjoying it, and yeah, I've always wanted to do something like this, so why not? And what you're looking at right now are the notes, those aforementioned notes that I was talking about. And, this is what I'll start working on and off throughout the morning, even the night before. And what I wanted to show you all here as we kick off the morning, what's kind of on my mind here today? Well, what kind of follow through are we going to see in the market this morning? Because there's a lot of talk out there. ES and NQ rallied because we have Amazon Prime Day, or as I like to call it, Go Broke Saving Money Day, although there were some pretty good deals. If you're disciplined about Amazon Prime Day, you could scoop up some good stuff. The other thing that I was looking at is we're going to see Apple announce, I believe, 4 new phones and new screen sizes. So that's definitely something that's going to help the ES and NQ. All three, by the way, gang, all 3 indices are all exceedingly tech weighted. This is where understanding the makeup of these indices from the standpoint of their ETFs, that passive investing universe, is so important if you're going to be a stock or futures trader in this day and age. So, and then there's talk of the NASDAQ whale part 2. In other words, with some large firm building large positions via options. Now, the last time this happened, you might remember, we had that huge surge in the NAS. The NASDAQ whale story was actually, I believe, written about by FT Financial Times, the pink paper, for those of you that don't know. And we saw, I believe, a 10 or 11% sell-off in just 3 days after that NASDAQ whale position was unwound. So these kind of surges do have a funny way of unraveling, but I don't know that it's going to happen today. But let's take a look. What I'm doing is I'm scrunching back in time here. All right. So what I want to show you is this is a conversation we had in the chat room yesterday in the Simpler Futures chat room. And the question was, Rag, if we had a strong day in the US, does that mean we're going to have a strong day in the Asian session? Does it automatically flow into that session? And the answer is no, it does not automatically flow into that session. In fact, in terms of the Asian session, which I don't really look at the Asian session until about 8, 9 p.m. That's when you've got your 5, really 5, if you want to look at it as 5 different financial centers: Auckland, Sydney, Hong Kong, Singapore, Tokyo. Everyone's awake by 8, 9 p.m. So you're seeing full participation. Now, there's another way you can confirm this, and this is the other way that I do it. I'll show you here. So let's pull up the ES. All right, so this is, oh, that's the euro. I'm going to pull up the ES. So what we're looking for is, when does volatility increase? Here's your S&P broken down into 1-hour segments throughout the 24-hour day. And so it's a 24-hour clock, as you can tell. You know, I've been curious if my drawing tools will work or if it'll screw up the recording. Let's see, will they work? Oh, I think they will. All right, so right in here, 20 to 2100 hours, that's 8 to 9 p.m. Eastern. This is on New York time, this particular graph. Notice how there's a pickup, right? 7, 8, 9. Why is volatility picking up? Because participation is picking up. Opinion is picking up. The trades are picking up. There's likely data that we could probably see that corresponds with those 2 hours, 8, 9 p.m. Eastern, in the Asian session. Now, it doesn't last very long. I mean, look at how the volatility drops again. You can see that. And you might say, well, what's going on at 2, 3, and then 4 a.m.? Again, 2 a.m. is Paris and Frankfurt opening for the day. 3 a.m. is London opening for the day. And then 4 is the Asian close. We actually, let me show you that. Let's go back to the chart here. All right, there we go. So we actually did not see a move to the upside. Very choppy Asian session. Not a lot revealed by the 8 to 9 o'clock range. And then we actually did not start moving higher until Tuesday morning today, 4 a.m. when the Asian market closes. And you'll see that you can't just think about the market as the Asian market to the US market. A lot of folks do, and they forget that at 2 a.m. you've got Paris and Frankfurt, at 3 a.m. you've got London, and I believe Boris Johnson is closing the bars and restaurants or something like that. Remember, we're also in the midst of all the Brexit negotiations going on. So that 2 and 3 a.m., whenever Brexit comes back around, and if you're an overnight trader, I say overnight because it's the morning in Asia, it's the morning in Paris, Frankfurt, in London, in Europe, and the UK. So however you want to call it, but when you're trading during those hours of the day, remember, different narratives are going to affect it. So if you don't realize that Brexit's back in play, that we're seeing potential reclosings in the UK, you're going to get broadsided by a narrative that has nothing to do with the fact that between 1 and 2 a.m. Eastern, sort of the midday, if you will, in the Asian session, that we were starting to rally. And then what happened to that rally? Technically nothing. I mean, you might look at, you could look at different price levels, right? But technically, meaning the arithmetic around open, high, low, close, that plots are indicators. That's what I mean by technically. Technically, nothing happened. Time happened. Time happened. And what time? People woke up, they had their first cup of coffee, and they weren't happy about what they were reading in the news. And that's a lot of sell orders. And we see there in the ES. And the same thing's going to play out in the YM and the NQ and likely in the Nikkei as well. I do not trade the Russell, by the way, in those hours of the day. I'll trade the Nikkei instead. So once we go from the Asian session, European UK session, and we get closer to the US, I'll replace the Nikkei futures with the Russell futures. So let's see, question about the yen. Sure, we can take a look at that. Sure. JAS, sure. So if for those of you that are not familiar with what the question is, okay, so we're going to head on over to a site called Finviz, finviz.com, and we'll look at the Forex, and we're going to go to performance. So you should see that on your chart. All right. So this is the relative outperformance for the day on the currencies. So I'm a huge currency trader. I've been trading currencies since late 1999 when they were actually made available as the Forex in the US. Before that, currencies were available in the US, but you had to trade them through the IMM, this part of the Chicago Mercantile Exchange, and you would trade currency futures. So back before the euro, you could trade the Deutschmark and you could trade all these other currencies, but they were just futures contracts, which was fine. And then, of course, late 1999, early 2000, the Forex brokers started coming to the U.S. because up until then, it was illegal, basically, in the U.S. So here's your one-day relative performance of currencies, Forex. And it's all relative to the U.S. dollar. So this is New Zealand dollar, U.S. dollar, Canadian dollar, so you can see the relationship. Normally, if I want to see risk appetite on any particular day, we need yen weakness and ideally franc weakness as well. Ideally, we see Australian dollar strength or Canadian dollar strength or New Zealand dollar strength, and it has to do with carry currencies and dollars, but that's usually what your structure should look like. So if the yen was at the extreme right, Jess, then that's risk. You want to see the yen weak, so that's fine. And the Aussie and yen were also extreme right. Yeah, so remember, currencies are just a barometer. I'll say currencies, the bond market, which was actually closed yesterday, currencies, bonds, VIX. There's a lot of markets that we would consider sort of barometers to what goes on in stocks. And they've been, by and large, not that accurate. So don't assume it's always going to be locked. That means that correlations are always locked, and they're not. You guys know correlations are not always locked. And if you don't, you know now. So it's a tendency. To me, this is the best way to look at market internals, if you want to look at it that way. Market internals, and it's more familiar and arguably correct parlances, tick, trin, put-call ratios, things like that. Ultimately, remember that the markets are going to do whatever the heck they want. And your best market barometer is going to be to understand flow. Where is capital flowing to? Out of and into. So if we see flow out of the yen, that's usually pretty promising and bullish for stocks. If we see flow out of the Australian dollar and the New Zealand dollar, that's not as important because just because traders are selling the Aussie doesn't mean they're buying bonds or gold. When traders are selling the yen or borrowing the yen, they usually are going to then use those proceeds to fund the purchase of what they would anticipate to be higher yielding assets, usually stocks. In this day and age, I think your next transition is looking at the flow in the individual sectors. Which sectors are seeing strength? This is sector SPDR. Which sectors are seeing strength? Which sectors are seeing weakness? So that's another way to look at it. So yes, sometimes VIX can be misleading. Sometimes the bond market really doesn't tell us anything about stocks. Gold really doesn't at all. Gold is a play on real yields, not on equities, weakness, or strength, or fear, right? That's not it at all. Although it's still talked about like that, which is mind-boggling, but it's absolutely incorrect. So you're going to notice a lot of these disconnects because no correlation is fixed and no correlation is 100%. So when you see the mix, for example, to your point about so the Aussie, the New Zealand dollar, and the yen were all in this. So right away, you should say, look, not that I can't trade today necessarily, but yen is weak, and that should really take precedence. And then just be cautious. And then also accept that maybe there's a narrative in Australia or New Zealand or the RBA or RBNZ that's causing those to be weak. Go look at that. And then just realize that maybe currencies don't have their pulse on the market on this particular given day, on this particular given session. Just accept sometimes that some of your indicators are not going to indicate well because the structure or any number of things, right? That's a tough thing to do. I totally get that, but that's why we have backups. That's why we understand the weighting of stocks within the sectors and indices. That's why we'll go take a look at the charts themselves and say, okay, I get that there are a few reasons to be a little hesitant about your behavior, but what does price action say? What does volume say? What does volatility say? Right? So that's one way. Do currencies run the roost? No, they are the largest market, though. To your point, that's very true. They are the largest market. Yeah, no doubt, and they're going to be very influential, but they're not always right. They're not always right. They're the biggest. They're the biggest in the marketplace, biggest market in the world, but they're not always going to, as you said, rule the roost. However, that yen weakness wasn't incorrect. What I think what was more troubling, to your point, as I read your comment, what was more troubling was that Aussie and that New Zealand dollar hanging out with it, which and kudos that you want to see that contrast. So that is true. That is true. So yesterday's yen was, I thought you said it was to the extreme right, and then Aussie and New Zealand dollar was. I didn't look at the currency yesterday. I saw the dollar weakness, and that was enough for me. So yen was strong, and okay. So yen was to the left. All right, got it. So again, yes, normally I call that yen's revenge. That is true. But again, once you've taken that barometer of the market, whether that be VIX or bonds or whatever, you still got to confirm that with price. And maybe you would be a little bit more hesitant about long positions, but I didn't look at the yen yesterday at all. Once I saw the dollar strength, I was off to the races. Once we saw the clearing range breach, off to the races. Once we did not see the gap up, and a considerable gap up, even fade in the least, off to the races. So don't just think one part of the market's going to answer everything, although usually it does a better job than that, admittedly. But one is not always going to be, one way of looking at the market. Currencies won't answer all the questions. All right. Hey there, Patrick Casey. Thank you. Your pre-market show is helping me become a more disciplined trader. Patrick, if you were here at the onset, that's kind of why I did it for me. I found myself kind of lollygagging through the morning. I found myself not getting right to what I needed to do. And I thought, you know what? Let me be accountable to some folks that are going to tune in at 9 a.m. and we're going to talk about the markets. And I can't be here unprepared. And it gave me a new focus, and I'm enjoying the heck out of it. So I totally get it. A lot of us that trade and then spend some of this public time either in chat rooms and doing things like this, which I definitely can see myself doing more of, podcasts or video shows like this. The reason we do it is, one, a lot of times trading can get really repetitive. I've been doing this for 32 years. It can get really repetitive, and it can get really lonely, but the lonely part's fine. I like being in my bat cave. I mean, welcome to my office. I enjoy being in my bat cave very much. So that's not ever been an issue for me, really. But we like to share our ideas, for sure, and so I appreciate it. Yeah, I appreciate it. Hey there, Mickey Man. So let's see. Do I think there will be more divergence in the ES and NQ today? So divergence. Let's really quickly. I got to go. But divergence is when the markets go in opposite directions, right? Only time ES and NQ will diverge. Keep an eye on the XLV and the XLF. Okay, keep an eye on those two ETFs. And with that, I got to go to my regular gig, which is 9:20 in the Simpler Futures room. Thanks as always for joining me. I'll see you tomorrow.